But that was Milton Friedman.
Yeah. It was Milton Friedman.
Well, Milton Friedman wrote that article in Hoover, 1998, and he had been in consultation with Japanese, and he gave him his high-powered money speech. You need to create bank reserves. We were just talking about this morning. When they voted on quantitative easing in March of 2001, there was one dissenter, a gal by the name of Aiko Shinotsuka. And she said, why are we doing quantitative easing? Why are we doing quantitative anything? Because we don't do quantitative. Ever since Volcker in the 70s, we realized controlling the level of reserves does nothing. And the discussion was, and the transcripts from the Bank of Japan are not as literal as they are from the Fed, so you have to kind of read between the lines a little bit. But the rest of the discussion was, we don't know what else to do. We're kind of at a crossroads here, so let's try this QE shit and see if it sticks.
Wow. I mean, the extraordinary thing about that is twofold. There was actual official dissent, which is unheard of in that culture, and that there was a female on that board.
Yep. She wasn't on much longer.
Has there been a female since?
Yeah.
Really? Okay.
Yeah.
Oh, that's excellent. But they've on the 20. Like I'm paraphrasing Jeff again, but like if you're on your 27th kind of version with a screwdriver trying to make it work, it's kind of suggesting that it doesn't work. Like, so why are we doing this? And so with Milton Friedman, he's obviously the architect of the inflation is everywhere always a monetary phenomenon, but actually just as relevant to that, I believe, and which doesn't really get commented upon, is inflation is everywhere and always a function of psychology. That these quantum mechanics of central banks, they create a latency. They create latent money. It's there, but you require the psychology of risk-seeking credit intermediaries who want to take it on. And they've rejected it. In Japan, they rejected it in the aftermath of a burst bubble, which kind of wiped out that culture of risk-taking. And lo and behold, 2007, 2008 seems to have had pretty much the same effect. And of course, allied to that is society comes in with its various checks and balances and amplifies that conservatism with regulatory add-ons which say, we don't want you to do this anyway. And so it really kind of locks down. And back to the lady in the Bank of Japan, she's like, well, why are we doing this? Because, it's the only damn thing. And really, again, it's like we need something. We're at zero interest rates. Everything else is locked down. We got to tell a story. And, quantum anything sounds kind of as if you're really on your game. So.
But even though it makes matters worse, I mean, it reminds me of when Russia first invaded Ukraine, and I was on Twitter and I was saying, okay, these sanctions, let's think this through, because they might hurt us more than it hurt them. And the response that I would always get is, well, we have to do something. We can't just do nothing. We have to do something. We have to do something. And those are the people that were responding to it rationally. And I said, well, no, actually you don't, because if you do a cost-benefit analysis, if the costs outweigh the benefits, then we shouldn't be doing something. I think maybe the same thing would apply to quantitative easing in that risk-taking that you're talking about. Is this quantitative easing, is this increasing the appetite for future risk, although it's putting a Band-Aid on it, or is it decreasing the appetite where we're going to be right back here in the next few years?
Well, I thought to myself, well, what if, having listened to the show, Eurodollar University, what if eventually they just went into, I mean, they are the Eurodollar system, but for years they've been watching their biggest corporate customers expand in mainland China. And mainland China has it. And Jeff, I'd like you to expand on the shortage of dollars that is a function of this profound economic thing called China. But what if they then actually begin to start pledging their JGB short-term bills and these reserves to borrow dollars, so that they could then make that kind of credit arbitrage and be the conduit of the missing dollars and fund the expansion in China. And so for me, these are just parallel universes. where everyone sees yield curve control, where everyone sees Japanese interest rates being minus 10 or 12 basis points in the Fed, on 550 basis points, and they're saying, well, that's why you've had this movement in the currency. For me, it coincides that the sell-off in the yen kind of begins right. It parlays right into shit, the China property bubble and the emergence of the defaults and the descent, and the change in narrative whereby your counterpart is starting to say, again, reputation, my ass is on the line here, and maybe I kind of want to reduce my risk with you a little bit. So maybe I could call you in, and they're short the dollar.
Mm-hmm.
Everybody
is.
Indeed. But in that operation, if you're pledging your JGBs, your bills, and then God forbid, if you then actually take credit risk and take duration risk on top of that as well. And the thought bubble came again because when we had the Asian tiger crisis, the first glimpses of the severity of it came from the Japanese banks, because it was the same thing. They, at the margin, were creating the dollars for the growth in these economies. And then they started to get tapped on the shoulder, or their counterparts started saying, guys, pull back, we're feeling the heat. And you started to see the emergence of a credit spreads widening, the share prices falling, and then suddenly, boom, the whole thing blew up.
You know what the irony is, Hugh? Not to interrupt, but one of the earliest phases of the Eurodollar system was from Tokyo in Japan. And the Japanese realized that how are they going to become this industrial powerhouse in the post-World War II era? And they said, well, the best way to do it would be to either make the yen an international currency, that wasn't going to fly in the 1950s and 1960s, or we can become part of this Eurodollar system, a central part of it, and essentially dollarize our economy and use the dollars, these offshore dollars, as the basis to become this industrial powerhouse. Mm-hmm. The irony here is the Chinese did the exact same thing in the early 1990s. They made a decision that we're going to dollarize our economy and link ourselves directly to that. We're going to follow the Japanese blueprint so that we avoid becoming the Soviet Union, but always fearful that we don't become Japan in the 1990s.
The hybrid, but Jeff, the industrialization of China, especially, which has been going on for the best part of 50 years. The last 25 years, in the aftermath of that Asian currency crisis and the arrest of political leaders, and Suharto went to jail in Indonesia. My conclusion was that China made a very conscious decision to fund. So industrialization, you have way more NPV positive investment prospects than you have normalized domestic savings. And that's fine. It's just great to have a huge surplus pool of high NPV domestic investment opportunities. And the US in the 19th century was financed by British capital, by the capital of the rest of the world. And the quid pro quo was that it ran a deficit. South Korea, which is the best modern example of industrialization. I mean, China's still kind of, GDP per capita is what, $10,000, $12,000?
Yeah, it's not that high.
It's not that. I mean, what is US GDP per capita?
40.
Yeah, and South Korea's pretty much 40,000.
I thought they were like 60.
Yeah, they're amazing.
Really
they ran a budget. They ran a trade deficit for 28 years. That's. You mentioned Russia and Stalin. They went through industrialization in the 1920s and the 1930s. And they imported lots of capital goods and know-how from the Germans. And by the 30s, it was from the Nazis. But the question is, how do you fund it? And they funded it from a domestic transfer of wealth from the household sector. But it was a very extreme form, which was they took all the they took the breadbasket of Ukraine et al. And they traded their crops for the know-how. And how many? Do you know how many like Russians starved and died?
A lot.
A lot, millions. So no one's starving, thank God, in China, but the being determined not to run trade deficits and have it all controlled internally, so that there's no CCP party leader ends up being like Suharto. The number one role of CCP is to ensure that it exists in perpetuity, and so they've chosen a model, and to my mind, it's a hybrid, therefore, between South Korea and Stalin, if you will, and that's, I think, changed the face of macroeconomics, and I think very few people have caught up and realized the implications of that.
Well, the Chinese realized they had a real huge problem after Mao. When Mao died in, 76, Deng Xiaoping, first of all, they got rid of the cult of personality, but they decided that they realized Karl Marx was right. You never engage in a socialist revolution in a pre-industrial society. China was totally a pre-industrial society that actually went backwards under communism, because that makes sense. And they instituted the special economic zones in 78, 79. They started experimenting with them, which is what you're talking about, the hybrid model, where they would essentially allow a limited form of free markets and capitalism, but only in small parts of the country. And that they continued to do that throughout the 1980s. And then when the Russian crisis hit in the early 1990s, they said, we need to really change here, because if we don't actually create a prosperous society, we will be the Soviet Union. And as Hugh said, the Communist Party exists for one thing and one thing only, to continue forever. So Deng Xiaoping, his famous Southern tour was in 1991. I think it was August 1991, after the coup in Russia. And I forget the Chinese term, but they called it open up. That is when China really said, we're not just going to experiment with special economic zones, we're actually going to turn the entire southern part of China, which was completely undeveloped, into what it is today.
If you look at Chinese M2, 2008 is a very, very significant day, because you've got this very predictable and controlled expansion in M2, and then thereafter it doesn't go geometric, but it looks more geometric than the preceding series, and now we're at M2 being close to 40 trillion US dollars.
Again, that's misleading, because that's the part that you see, which is the government creating credit to try to offset the organic economy that's no longer creating economic growth. That's the false signal. That's the Keynesian stimulus that came in 2009. The local government financing vehicles that went nuts borrowing funds that the municipalities couldn't. So that was the creation of on-the-books credit when you had all this other stuff.
And it coincided with the NPVs on the investment, on the gross fixed capital formation, on the rail tracks, on the airports, on the bridges. They went from positive to flat to negative.
Right, because something changed. And it was really 2008, but really 2011, 2012. That was when the Chinese realized the situation had changed permanently. And that's really when the Japanese had already become...
Forgive me again, but I'm a Chinese bureaucrat. Where am I seeing it?
Everywhere.
Because, their economy doesn't slow down.
Oh, it has.
Tremendously. Yeah, but vis-a-vis the rest, but they really ramped it up. And so they came down from 12, but it was 8, and everyone was as, 1.
So what happened? You had massive economic growth in the middle 2000s, and then they had a temporary slowdown in 2008, and then they had a recovery in 2009 and into 2010, but it never got back to 2008. And then when the European financial crisis
the rate of
happened,
growth never got back to it.
The growth rate never came back, but much of that growth in the 2010 period was from this artificial stimulus, forcing funds through, making municipalities spend and hit GDP targets regardless of how they did it. So you had low quality growth that didn't get back to the previous peak. And then you had the second crisis hit, which was not a European sovereign debt crisis, but another Eurodollar crisis in 2011. And then China really slowed down from there.
Which that being the sovereign debt crisis in Europe.
Which wasn't really a sovereign debt crisis in Europe. It was another collateral shortage. So you had a major shift in 2008, and then it caught up with the Chinese in 2011 and really 2012, which just happened to coincide with Xi Jinping taking the reins.
But are you saying, do you believe there was pressure emanating from China, which reverberated back and hit and manifested itself as a European sovereign crisis?
No, I'm saying the European sovereign crisis is the one that caused the slowdown. It caused monetary difficulties that led to the Chinese economy taking a huge step backwards from which it's never recovered.
Are you saying it created more risk aversion in the Eurodollar credit mechanism?
And temporarily, the Japanese were willing to supply.
So they step into that.
They started really in 2009. You see the statistics.
The Japanese were to supply the dollars.
Yeah, and
that's what the
look at something like Tick, for example.
Yeah.
You see Japan is like this, and then all of a sudden in 2009 it goes parabolic.
Right.
That wasn't for Japan. The Japanese were sensing opportunity. They were the only risk takers out there.
Right.
They said, the U.S. is screwed, Europe is toast, but China's going to be fine. China's going to be China. Look at Hu Jintao. He's still committed to growth at all costs. Look at them. They're doing massive amounts of stimulus. Let's get in on it. Mm-hmm. So that's when, in 2009, is when Japan really got entangled with China. That's when they really stepped up all of
What was
Didn't Abe even go to China, and he did kind of that little détente, referring back to the whole Nanking thing. Do you know what I'm talking about?
Yeah, and that that caused a little bit of a stir back in Japan.
Yeah.
But that was exactly it.
Yeah.
It was your conspiracy.
Yeah.
No, but that was. They decided that there's opportunity here.
Also, just not to interrupt, you're kind of flowing, but for people who don't know, Japanese M2 is twice the size of the United States M2.
Yeah.
That's how much credit
relative to what GDP?
No, just absolute.
Just absolute value.
Absolute.
You say Japanese or Chinese?
Chinese.
Chinese.
Did I say Japanese?
Yeah.
Sorry, I meant
Chinese M2 is about $37 trillion.
It's actually
in
40.
US is 81.
Yeah,
it's
40, but yeah, that's US dollar equivalent. That's not.
But that's what I was saying. But from 2000, if you look at the movement from 2008 to that figure,
no, that's what I'm saying.
I'd love to, and I think we're trying to get there, the exploration of how that came about, and of course the consequences of that today, because you got $40 trillion, let's say, supported by $3 trillion of treasuries, and everyone's saying they're going to sell their treasuries to support the currency. Actually, do they have enough treasuries to support the money supply? No.
That's
But anyway,
how did that work with the dollar? 'Cause I'm trying to think what the dollar was doing. Did the dollar spike and then come back down when Japan started to get involved with the game there as far as providing that dollar liquidity?
Yeah, so if you look at it from the perspective of China's yuan was they forced the PBOC to repeg it through most of the 2008 crisis. It started in July. I mean, everything started, the global financial crisis really became global in July 2008. You saw oil prices start to come down. You saw the Chinese start to do things with their currency in other places around the world. But for the most part, during that immediate aftermath of 2008 and 2009, China's yuan went back to its strengthening trend because that was the dollar inflow, largely from Tokyo, going back into China.
but that was one of the world's greatest macro trades.
It was
Because
for a while.
the US had gone to zero rates, gone to zero. China had pegged it for the best part of 2 years.
Yeah, they didn't leave. They were.
And so it was even more undervalued, if you will.
Yep.
And
then it popped.
they popped it. They then, with the pop, they put their, the currencies, the daily movement is prescribed. And back then it was really, really tight. And so they defined the volatility. The destination was the currency was going to appreciate. Mm-hmm. If you were Chinese, the game was, I'm going to borrow dollars, sell and get. And so my liabilities, it cost me nothing, and my liabilities is going to fall.
Value. Yeah.
And if I can somehow get it onshore in the shadow banking system, I'm going to make 20%. Yeah. And I've got the PBOC, and there's just there's
no currency risk. There's no currency risk.
There's no currency risk, and so there's no variance in the mark to mark. Yeah. So the swap ratio trade on that, and what the PBOC discovered was the size of that trade was fucking enormous.
Yeah.
That's probably what led them to finally say we need to let the currency go. I don't think they were ready
They
to.
weren't.
Yeah, but they had to.
Are you talking in 2015?
Oh, this is
No,
2010.
before.
Oh, this is before that one.
Yeah,
Okay.
But
then the currency, like you said, it just went.
I traded at I think 13, where they then came in because they started. They changed the intervention levels, or the what do you call it,
The
the
daily band, yeah.
They expanded it, so they introduced vol. And they're like, okay, motherfucker, so here we're going to double the vol. Let's see what happens to your risk position. Risk position came down.
Yeah.
But during that period, the earlier period, that the hunt was trying to, they were over invoicing. The trick was, how do you get those
How do you get the
cheap dollars
Yep.
onshore
Yep.
and earning 20%?
Yeah, that was the problem because the Chinese officials would take, if you did it through official channels, assuming you get approval, the Chinese would just confiscate the dollars as an inflation fighting tactic. But that, again, everything changed in 2011, 2012. When the currency began falling, I think it was January 4th of 2014. And it really hasn't looked back since.
And right about then, gold peaked at the 2000 level. And
So
the
Jeff,
commodity
is there-
cycle peaked.
I should know this and I just don't. Are there these nostro accounts between Japanese banks and Chinese banks that don't go through the official channel, and
There has to be,
Japanese
right?
banks
there
extended
has to
dollar
be.
credit? Because that's what we were talking about the other day. The Japanese banks extended close to $1 trillion in dollar-based credit to China. Not China officially, Chinese corporates.
I thought those might be off balance sheet. Do you know
That-
off balance sheet because they offset each other?
What do you
It's
call
like
it? What
Hugh
are we
said,
talking
It's a
about?
no stroke, O stroke.
You have, yeah, right. You have.
What is a no-stroke?
It's like a way to settle just between. You
It's
could-
interbank settlement.
It's
Yeah.
rather than settling through the Fed, you just settle between yourselves. I owe you, you owe me.
But this is
We
a
know
central
that.
bank thing, or this
No,
no,
it's
no,
outside.
correspondent
It's
banking.
correspondent banking.
Yeah.
Essentially, it's how do we transfer funds between each other without having to go through official channels? Because sometimes it's
How do we settle?
right. And so the question is, that's why I think one of the reasons why the Japanese were so central in that 2009 post period is because they had the contacts to go through Hong Kong, where they could have the on the books transfers, and then from Hong Kong into mainland China.
And that was a way to do it too, without the currency variance because of the Hong Kong.
And again, are those accounts on or off balance sheet?
I think that from Hong Kong into China, I have no idea. I don't think anybody does. I think they're more likely off balance sheet.
Are they usually on balance sheet though?
They would be normally.
I think those would
No,
typically
they
be
would.
on balance sheet.
Okay.
I think because they would go through the.
But if you're tracking the money trail, it kind of stops at Hong Kong.
Yeah, I get it. It stops.
Yeah, yeah,
I'm just saying normally.
I think that how the money comes into the Hong Kong banks, they
Yeah.
give them to the Hong Kong Monetary Authority.
That's
To
one
Hong Kong.
reason why.
Your account would be listed as an asset, and the account
Right.
that they have with you would be listed as a liability.
That's one reason why change is left. But the only stock market I pay attention to is the Hang Seng,
Huh.
because you look at the Hang Seng and its movement is highly correlated with what I perceive as dollar flows from the stuff that I do. So if the Hang Seng's rising, that's a sort of loose proxy for excess dollars sitting in Hong Kong, waiting to either go into China or someplace, coming out of China and going someplace else. That's why you see, recently, the Hang Seng is one of the worst stock markets in the world right now, because all the funds are leaving Hong Kong because they've left China.
Yeah.
Dollar short.
Yeah.
Right?
Yeah.
Plus, it's the market's predominantly